Well, good morning. I guess it'll add the picture here in a minute. We'll see if it adds me to the stage. Another another week in the market. There we go. Come on, baby. Another week in the market, another day in the market, some more profits in the market. It is Monday morning. Yes, we've got Monday morning and we're going to get it popping. I have seen that over the past maybe several weeks, like it probably depends on where you are and what you're trading, but I do seem to see that the opportunities on Mondays do seem to be plentiful. All right. There seem to be plentiful opportunities on Monday. I think you have to definitely have a lane. Like I've said before, you need to have a trading strategy, a trading lane, and you need to try to stick with that. I think one of the things where a lot of us go wrong, and I'll put us in the category, is we maybe drift from strategy to strategy or style to style and don't really get your own edge. And then that's where you can run into problems when you don't have your own trading edge or your own trading plan and style. You can just run into issues where um you want to follow. I think everybody needs a coach and I think everybody needs a mentor. So you want to follow somebody who's going your way, but you need to figure out what is your way. So that way you can figure out who is going your way. All right. It's Monday morning. It's about 8:30 right now. I welcome you to the Educator to Trader Monday morning live or every morning live. We do our pre-market call every morning at 8:30 right here. Same time, same bat station. Good morning, Carmen. So what you see on the screen here is SPX 500. SPX 500 runs through the night, even though you can't see regular SPX, but this lets us know what's going on. We've come down to equilibrium place. This is a 7-minute chart, so every candle is about 7 minutes. All right. We spent, good morning, Marcia. We spent some time yesterday afternoon, yesterday evening, I guess it was, talking about some different trade opportunities, what kind of things we got coming up, earnings, all the fun stuff for the week. So let's go back through some of that this morning, and then I'll go through a couple of stocks. If you have a stock that you'd like for us to look at, then put it into the chat, the comments, so that way I can see what it is you want us to look at. All right. We're looking here. Our earnings this morning, we got I think that says Money Hero. Yep. Have you all noticed? I'm not sure if you're TikTokers or people who scroll TikTok, but I think Mr. Beast has put out some type of game that everybody supposedly wins. And as soon as he puts the game out, then all of a sudden you get all the scammers who come right behind that, using his picture and using videos to try to get people to sign up for their game and deposit money. And it's not the same guy. It's like what made me think of this was this whole Money Hero thing. It's like, folks, the scammers will show up quick. They don't waste any time coming to the scene trying to get their little piece of the pie. They don't waste any time. All right. So anyway, earnings this morning, Money Hero. I don't know who that company is. I'm just saying that's brought that idea back to me. Interpack is a tool company. They're aftermarket today, and Beyond Air is going to be aftermarket today. Tomorrow morning, we're going to have Carnival Cruise Lines, TD, and Cinex. Now, TD, Cinex, and Airship. Carnival is probably going to have sympathy with Royal Caribbean as well. So I feel like, I don't really know. I haven't looked at any of the technicals, but I just do feel like the cruise lines haven't gotten back to their like pre-COVID glory. So there could be some movement there. So just an opportunity. And then tomorrow, after a potential opportunity, tomorrow after the close, we've got FedEx, Progress, and this is Green Tree Hospitality Group. Okay, Green Tree Hospitality Group. That's all the we'll cover for today. I wanted to share. Did I put? Yeah, I did. I put it in the right place. There we go. Okay, so Adams numbers for the morning. Adam Mancini, level to level trader. He trades the ES. Many of us trade SPX. So I have to change the numbers or, adjust the numbers for the gap. So ES and the gap between ES and SPX is 65 points. So I take his number, subtract 65. And as time passes, this gap closes up and closes up. So all day, Friday, Saturday, I posted about one support in SPX 54.54. The levels remained ultra precise. We held to the tick on Friday. We retested last night. Exactly. Again, bounced, lock in part gains. The plan for today is really no change. 54.64, 54.54 are weak. Must hold in order to keep 54.77, 54.95 alive. If 54.54 fails, then you're going to sell to 54.34. All right. If you're trading XSP is the mini of SPX. If you're trading that, you've got 550 on the call side and 543 on the put side. Now, when I give these numbers over to the right, I'm talking about call credit spreads and put credit spreads because I am a seller coach. So I'm going to talk about things that pertain to sellers. I will bring in some buyer information because, I can see, right? I will talk about some buyer things, but for them primarily, I'm talking to sellers. All right. Primarily, I'm talking to sellers. So last week, we put out our list last week for our trade ideas. 100% win rate last week. Yes, sir. 100% win rate last week. And all those trades, any of these trades, and these strikes were 100% profitable last week. So if that's of interest to you, yes, and yes. Now this week we have us a new one. Good morning, Tanya. Good morning, Mr. Earl, and good morning, Lisa. How y'all doing today? So this is the trade idea for this week. These are the trade ideas for this week. Again, not investment advice, just showing you what I see. These values or these stocks, the watch list really comes from a part of the Peakbot watch list. A part of the Peakbot watch list. Now, Peakbot is not going to allow their watch list to be seen by the general public come July 1st. So if you have not signed up for Peakbot, and what is Peakbot? Let's talk about that real quick. What is Peakbot? Because I think that's important. Sometimes people are like, you talking about this Peakbot, and who are these people? Well, Peakbot is automated trading for sellers. Automated trading for sellers, which means you, let me see, make sure I'm typing. I can't type and talk. Which means you decide what stock you want to trade, and Peakbot enters those trades for you, exits those trades. Whether you want to do put credit spreads or the wheel, Trend Spread Bot is going to be live soon. It's in beta testing right now. Or you want to trade the Iron Condor. I think that was also in beta testing, but you have the Peakbot, not the Peakbot, the wheel strategy, which is put credit spreads basically, and you pick the stock, and then Peakbot will run that for you all week. You can pick the number of contracts, you can pick the stocks, you can pick multiple stocks that you want, and then it's a hands-free and automated trading system. The bot is going to enter the trade at the appropriate time, and it's going to pick the appropriate strikes for you. And all you need to do is allow the bot to access to your account, to your trading account. It's only going to do the things that you tell it to do, right? The bot is not just rambling around in your trading, in your portfolio. It's not doing that. If you tell the bot, I want you to do a put credit spread on T triple Q, that's all the bot's gonna do. It's not in there like looking around saying, oh, they got a bunch of money, let me go find some other stocks to trade, or oh, they got a little bit of money, let's still go find. It's not gonna do none of that. The bot is going to do exactly what you tell it to do as far as which trade you want it to enter for you. All right. So here's our list. Again, these lists come from the Peakbot watch list. I take the lower risk for the put credit spread and call credit spread. There's a lower risk area. I pick those for the put credit spreads and call credit spreads. And for the Iron Condors this week, I had to go to the moderate risk list because there was no neutrals on the lower risk. These things are neutral, and when something is neutral, it can be basically, it's kind of quote unquote consolidating. So an Iron Condor could work there. pick 1, 2, or 3 of these and run it. I'm actually going to chart a couple of these. I'm going to do General Motors, Dow, Kroger, and United Airlines. I'm going to do those 4 this morning. If there's something else you want us to look at, then please do mention it. Okay. I think so far we're going back to the chart. It's about that time, 8:45. As I talk about this, I want you to know I'm coming out with credit spreads. I'm talking about credit spreads, and there is a training to go along with that. I kept saying $47, but it's actually $67. If you've heard me say 47 and you really want it at that, then let me know, and I'll give you the discount code for another $20 off, because I don't want to have said something and then not stand by my word. That's not how I operate. Not at all how I operate. Okay. So let's go here and see what we're looking at. I'm going to start with General Motors. Starting with General Motors on here. Let's go back to the daily chart. I've talked to you before about one of the best ways to enter these credit spreads is to identify your support and resistance. Once you have them, put an alert on that lets the system tell you, your whichever broker you have, hey Asleen, hey Karen, have the broker tell you when it's at your support, so that way you can enter your trade. I have General Motors on the bullish list, so I'm going to look at a put credit spread. I'm going to look at put credit spreads. According to PeakBot, it is bullish, and PeakBot uses the 67 period moving average to determine whether it's bullish or bearish. 67 days EMA, and General Motors showed up as bullish. So here we are. Okay. Well, look at this big old hammer candle right here. This last one, which tells us right away that it wants to get moving. It wants to go up some more. Those who know about candles and candlesticks and what do those tell us? This hammer candlestick says, I want to go up some more. It's almost like this wick is like this one here. This big old wick tells us that we're going up like a rocket. Big old wick says, I want to go up a little more. I want to go up a little more. Okay. So let's see. I need to look at one more area. There we go. What do we see? A support. Pre-market price is $47.79 right there. So it is, I wouldn't want us to get too close in here. I'm going to switch over to Thinkorswim in a minute. This looks like it's probably a chair. Let me make sure. Right in here. Yep. Y'all can't see this line. This blue line is what I'm looking at. The candles, these candles go with an indicator. That's why it didn't go away when I changed to the line. Our support there is at 47.40. Of course, we'd want, our strike to be a little bit below that. I've got us as a put credit spread at 46.5. I'm going to put it down here. Put credit spread 46.5. 3, 4. 45.5/46.5. Okay, that's what I see as our put credit spread. I'm going to bring us up to, let me bring this over to the other screen so that way you can see the same things I see. Do you see what I see? I'm not sure if y'all can see this. It's a little smaller. I can make it bigger. I don't want us on Pan W. I want us on, what are we on? General Motors. Let's get us a little bit bigger chart, a little bit bigger line so everybody can read, so people can see the lines. Okay, I'm on the 28th. We're doing weeklies. We're going to single. I don't need that. Okay, June 28th, I'm looking at. Come on, show me what I want. Okay, 46.5 is a 79% probability out of the money. right? 46.5. That went along with the chart. I didn't just, dream this up. Went along with the chart. If we change this to vertical, 46.5, I'm going to change this to 45.5, not just 46. Even if you do it as a 50-cent spread, though, you are collecting $7 in credit. When you change it to a one spread, it's $11. This is going to be a little bit different when the market opens, because right now the market is closed. It's showing $11. Wait till the market opens and see if you want to do General Motors as a put credit spread. Confirm that you like the strike and put your alert on and go with it. I'm going to go to the chart. My chart's here are 4 pieces. So I'm going to go to the chart and put on an alert that says, what did we say was our support? I think we said 47.40 was support. Come on. Yeah, 47.40 is our support. So I'm going to use that to say, okay, put on the alert, right click, create an alert on General Motors, and at or below 47.40. I think there's one here that you can also have it when it crosses back above 40, at or below 40. I need a 7 here. 47.40. This is a put credit spread entry. Okay, I think down here with the notify, something, I remember seeing something down here, notify when it crosses again. Maybe it's below this one. Let me make sure. Option, submit now, reverse. Alert for reverse crossover. Here we go. This is the bottom. I'm on Thinkorswim, and under the alerts tab, alert for reverse crossover. Basically, when it goes below and then comes back above that, then we want to create that alert. It says if it hits 47.40 and then goes back up above it, we want to know when it goes back up. That lets us know that it did, move on itself away, and off we go. Okay. Back to the charts. Okay. That was General Motors. Let's look at Dow. Okay, Dow is on the bearish list. So we're looking at a call credit spread. It's got a gap here we must look at. It closed here. Ay. Come on. There we go. It closed here and opened there. That is our gap. Okay. Putting on my little foursome on my gap. Lets me know the levels inside the gap. My quartiles. Okay, so we're looking at, like I said, a call credit spread. Call credit, but the top of this gap, the bottom of this gap, the top of this is going to provide some resistance. If we're looking there, notice we do have some other things that happened in this same general area, and that's at 54.91. I actually have us at a 55 call credit spread. 55 call credit spread. 22S 55.56. That gap got filled by that price action. Call credit spread 55.56. Let's go over to the Dow. The Dow. This is Dow, the company, not Dow. Not the Dow. It's just Dow. I want to go to the trade screen. Looking at Dow, let's go to the single chart. Call credit spread 55 is a 76% probability out of the money. If you want the next one up, it's at 93. There may not be as many premiums up here. We're looking to at the plus minus number 1.2. If we add 1.2 to this, we're right at 54. You add 1 to this, you're at 55. 1.2 is a little bit past that. But again, you're looking to see that it would hit wherever and close below this. So 55 is our call credit spread number. Change over to vertical. At this point, 55.56 is paying $16, 16% return. Of course, you close it out whenever you want to and go ahead and collect your premiums. $16 credit based on what, $84 of collateral put up. Yep. So how about we go over to our charts and put on, what do we have? We have 54 and some change for our call credit spread alert. It was like 54.90, something like that, at or above. Call credit spread entry. All righty. Let's make sure I have it specified that it will alert me when it crosses back over. That's what we want to see. If you want to see it hit this resistance, you want to have it hit the resistance and come back down. That way you'll know that it has reversed and you're cool to come on in. Good morning, Nori. I got you on Zoom. I see you. All righty. Let's go ahead and do Zoom now. Trying to see what I have for Zoom as the strikes I put on already. Here it is. Zoom has 61.62 call credit spreads. Okay. Now, Zoom has turned and done its, movement going in the other direction. So it is now showing on the 67 period moving average as bullish. But you could also look, as is it called bearish? Sorry, it's showing as bearish because of this downwards motion here. But for the short term, we do see that there's been some bullish movement. So a potential iron condor is afoot. It is afoot. We could potentially go with an iron condor, but I have 61 as the call credit spread strike. I think that's based on the 50% mark of this. I don't necessarily like what that's looking like, but let's see if I go to a smaller time frame. Maybe I can see some resistances along the way. I do see this area here where this was back in June 13th. We got a stall that happened right here at this equilibrium point at 60.53. At 60.50. Actually, we're right in some resistance as well, too, if we're looking here at this big old candle. Yep, 59. See how we're kind of bouncing up against this and hadn't pushed over. Not saying that it won't, just saying that that's where we are. All right. So I have us with a 61 call credit spread. Let's go to the trade, and we're looking at Zoom. I do like that underneath though. So let me go look at the single as well. If you're looking underneath, 56, 57 could be, because 83% probability. We got a 1.8 on the plus minus number. So if you subtract 1.8 from 58.8, you're basically at 57. So your 57 could be a spot for you, 56, 57. And I also went with the 61, like I said here. Let's look at how this could be 56, 57 put credit spread. See what kind of money we're looking at. 56, 57 is paying $9. It shows in the pre-market, right? So add that $9 to the 61.62, $8. Excuse me. So You've got 17. I didn't bring any water. You've got $17 on both sides. Again, market is closed. Those things may change. You want to put on your alerts though, because as price gets closer to whichever one of these zones you're looking at, then you're going to be able to enter and take in better premiums. You're going to be able to enter and take in better premiums. Question on Zoom, Nori? Question or comments on Zoom? Okay, let's go look at Kroger. I'm also going to look at it on the chart. Look at the Kroger. It's interesting when people say that. I'm going to the Kroger. How about it's just I'm going to Kroger, to the Kroger. Okay, so here we are on the daily chart looking at Kroger. We've got it as a bearish move. See all this? And this big old candle from Thursday. Oh, my word. Big old candle from Thursday created a fair value gap because it gapped down so much from this previous candle here. Those who I don't really want to, every time I bring up fair value gaps, I feel the need to explain it every time, but I just really want you to, if you're saying good morning, Janae, hi. Hi, you weren't saying that. We looked at GM because we already did that. There's resistance right here in the middle of that fair value gap at 51 for Kroger. I've got 51, 51.42. I've got 51 as a call credit spread strike. 551 at the call credit spread strike. Now, this one may feel a little bit much because our current price though is at $50.10. So we're a little below even where we where we closed on Friday. We're a little below that. I'm going to go look at SPY next. I want to look at SPY. We're on Kroger, right? Go into single. Talked about the 51. 72% probability at the money may feel a little uncomfortable, but if so, go up to 52. 1.2 is the probability, is our plus minus number. So if we add 1.2 to this, we end up at 51.4, which is right where the resistance is, right? So 51.4, if you pick 51, the thought is that price will come back down. But of course, you can be safer at 52. So again, you trade as aggressive as you're comfortable trading. 51.52 right now is showing $14. Of course, the market is closed. 52.53 right now is showing $2. Not necessarily what we want, but when you go put on your alert to make sure that it will alert you when it's closer to the strike you're looking at, then you're going to get better premiums there for sure. Okay, let's look at SPY. I wanted to show, I put this in my own community, in the educator to trader community. I wanted to show what's going on with SPY. Now, SPY on the weekly, this is SPY as a weekly chart, as a weekly. This candle up here at the top, I'm not sure if you can see the green inside this dot, and you probably cannot. So let me go and turn off that so you can see the candle. There we go. See the wick on that candle? This would be what's called a shooter or inverse pin bar, whatever it is you want to call it, upside down hammer, all that. Generally, this signifies a movement back to the downside, generally. Right? And nothing's ever everything. This is SPY. We've been running hard, but this is what happened last week. This is a weekly candle. So it ended the week as an upside down hammer or a pin bar or a shooter, right? This is what last week looked like. Let's put us a line on our resistance. We can do this if we want to do our broadening formation. We've got, I probably could swing it from here, but I could swing it from here too. Showing this is the formation, the broadening formation there. Now this one, I'm not as fond. Let's put our gap on here. On the daily chart, we have a gap that's down here that will want to be filled. Okay, there is the gap from 536.96 to 541.72. That's the gap that is below us. Current price right now in pre-market is 544 and some change. 544 and some change. This is the quartile for the gap. These levels inside the gap, this 25, 50%, yada, yada, is going to provide some support inside of there too. So just know that. But the gap is going to want to be filled. So let's look at, we're looking here at the gap, top and bottom. It's going to provide in 50%, or actually the levels inside. I won't mark all those lines, but just know that there's support down in there as well. Friday, we had this doji looking thing. Let's put another gap because this closed here and the gap went to the open of there. Again, we've got some supports inside of that gap. So as price comes in, it could go on all the way through it because we, SPY again does what it likes and does what it wills. But there is some support at 543. 543 and some change. What would be a good entry if you were looking to sell? You got your call credit spread entry up here above your resistance. You could go with that. If you're operating as a buyer, you're saying, I think I'd like to buy, I wouldn't buy until after, for the weekly, until after SPY passed the bottom of this candle. So the bottom of this candle is 541.61. So if I was a buyer, below 541.61. If I was after the price had passed 541.61 is when I would do puts. You want it to clear the bottom of this candle before you jump in, going to see and then you need to watch what it does. You can trade, for the gap fill with these gap lines as your targets. You could do that. Of course, we can do call credit spread. I feel like I want to go look at the number for the week. It depends on if you were trading it for the week for call credit spreads, or were you doing it just for the day? If you're doing it for the week, you're going to look for, maybe not for the day, because you also don't want the day trade if you don't, if that's not how you trade. You want multiple days. But a call credit spread, enter today for tomorrow, or enter today for the end of the week. So not 24, we would look maybe 25. You would want to also wait to make sure the market open and get these numbers very accurate. But 86 is like 549. And if you're going to the end of the week, which is the 28th, let's look at the plus minus number, plus minus 6. So if you added 6 to this, you're at like 550, 551. 550 or 551 is an 80% probability out of the money. Let's say 551. Market's closed, but 551.52 is paying $22 for the week. It's paying that for the week. Let me see what it would be for if you were entering today for tomorrow. Tomorrow, plus minus 3.3. So you'd add 3.3 to this, put you at 548, really. 548 is also paying $21 for just a day. So either you want to do it for the week or you want to do it for the day. 548, 549. Let's go look back at that chart so we can see if we're at a good spot. 548 and 549 is up where we were. That's the top of this candle, which that will be providing. That's like 550. I'd be up there above the 5. You definitely at the 550 because we know that that's a psychological number and will most likely provide some more support. You see it didn't hang out above there. I think it's supposed to be 548. It didn't hang out above there last week. Okay. Call credit spread at or above 548. Let me put a little note here for 6/26 expiration. If you were going to go longer, then you'd want to go above that 550. All right. If you're going to trade it as for longer, generally, we don't do a whole lot of weekly spies. We more do daily, 1 day, 2 day kind of thing for SPY and SPX. Speaking of SPX, let's go look at it. I don't know if I've looked at SPX in a minute as far as like charting it per se, but let's go ahead and let's do that. We got folk on here who trade SPX on the regular. It's a lot that happens in the SPX, boy. You got to know what you're doing. You fool up with SPX. I want you to know that it provides great opportunity, but it can also provide great loss. So you want to know what it is you're doing if you're going to trade SPX. This is a supply zone up here at the top between 54.64 and 55.06. That is some supply. It could, grab hold and do its thing. That's the weekly chart we're on. Come down here right around 53.10. We've got some support. Let's go to the daily. Trend line. Swing high. Sweet chariot, coming forward to carry me home. Swing high, sweet chariot, coming forward to carry me home. James said, SPX, know when to hold them, know when to fold them. Yes, it's the truth now. That's the whole truth, Jamie, because listen, know when to walk away. You need to know when to walk away and know when to run. Yeah. SPX, as I think I've heard Ken Branson say it before, it will snatch your face off. So you want to be mindful of, you want to always know who you're dealing with. Know your audience. Okay. All righty. So this is on the daily chart here. We've got resistance up here at the 5506 or 5500. It didn't stay. It wasn't able to close up there last week. Doesn't mean it won't try again, but it wasn't able to. But we may be seeing a pullback, a necessary pullback, because you can't run at all-time highs forever. There has to be a chill period, right? So 54.08 I see here as the top of this gap that will provide some support. Okay. 54.09, there's also support in this area here. Yep, right in that 54.31 area. If you're trading SPX, which there are a lot of people who do, call credit spreads, put credit spreads. I probably would lean more, if I was trading it, I probably would look at the call credit spread side for a day or a couple of days, because at this point, I feel like we're going to have again, not anybody's investment advice, just telling you what I feel. It's probably going to have a little bit more of a pull. All the semis are down. All the semiconductors had that same upside down pin bar. Those are going to pull. Apple is pulling back. Meta is pulling back. So all the things that comprise SPX and SPY, those things are pulling back or kind of moving back too. So if the things inside are pulling back, then that means the big boy probably will too. So just, again, trade what you see. We don't really have any, kind of a bias when you come into the trade, but you need to be mindful. Okay. Trade what you see. Trade what you see. All righty. I'm going to start to wrap us up. So listen, today I've given a few opportunities. We've got General Motors, Dow, Kroger. We looked at Zoom. We've looked at SPY. We've looked at SPX this morning. Yeah, I didn't get to Uber, but Uber's kind of in a consolidation. Last week I traded Uber a couple times and was able to get some iron condor money. You might want to consider that for your trade. But we have a whole list of, we put our list back on. We have a whole list of choices. If you're in, if you follow me anywhere on social media, I think it will. Not really. It's all in my Facebook. I don't think I put it on TikTok or Instagram yet, but this is what we have if you're in my Facebook groups. And if you aren't in my Facebook group, go ahead and look us up. Options Trading for Beginners is my Facebook group, or look for me, Arlissa Pinkleton, Arlissa Bosick Pinkleton on Facebook. There's so many people who try to imitate. I guess that's imitation is a compliment, they say, but there are people, and listen, I'll say this real quick. I'm not ever in anybody's inbox talking about, let me trade your money for you. So if that somebody comes at you talking about, let me trade your money, that's not me. Because first of all, I don't believe in that. I don't believe in that. Letting somebody else hold all your money and trade it for you. No, because that's where people get all issues. You run up with all the issues when that happens. And I'm not trying to be a part of none of that. None of that. All right. So this is our list for the week. You can check those out, see which trades you like, and hop on in and do those. The vertical credit spreads, as I told you, that training is available on my website, educator2trader.com. You can go over there. Also, if I'm talking about credit spreads, you can go over there and see the strategy, get the strategy, and use it for yourself every week. That's what we use. That's our ball of wax, right? Chart Your Way to 100K training program is still available. It's at educator2trader.com as well. It's basically walking you through all the things you need to learn how to be a good charter and how to do technical analysis according to your charts. All right. Be sure to like and subscribe. E2T membership is open, always open. Weekly training calls, monthly training calls, daily stuff in the Telegram. We're just there together, hanging out together, and I'm there to help out. Me and my little team of folks who help us out, we're all there to make it do what it do. All right. Our trader declaration. I declare I'm a great trader. I declare I'm a successful trader. I declare I'm a focused trader. I declare my wins exceed my losses. My accounts grow more and more each week. I'm a wise and knowledgeable trader. I always make smart and lucrative decisions for my portfolios. I declare I'm a level-headed trader who does not trade my emotions. Lord, it's you who gives us the power to get wealth. You teach our hands to war with the purpose of establishing your kingdom. Help us today to trade wisely and strategically in order to fulfill this purpose. Give us more than enough so we can have what we need and enough to be a blessing to others. In Jesus' name, amen. All right. So I want you all to make sure that you move forward and that you have a great, not just a good, but a great trading day. I want you to consider not over trading. Pick you a stock, a 2 stock, a 3 stock. Don't just go behind whatever so-and-so is running. Somebody pops a tweet or something else that says something else is moving or running, and next thing you know, you over there too. Be careful of that, especially if the person is trading something that you don't necessarily trade. You haven't looked at the chart. You don't know what it's doing. And you just said, because somebody said, if they're a buyer, you're a seller, you got a whole different layout already. Right? Or if they're a buyer who's only trying to scalp and you're buying to swing trade for a week, that's a whole different, there's two different, inputs, two different entries there. Maybe you're entering for the week and the other person is entering for 3 months. That's a different entry, right? So you just got to know your lane and stay in your lane. All right. Know your lane and run therein. That's my running move. All right, y'all. Okay, we're going to do 3 things. Stay green, get this money, and have a great green day. I will see you all later. See you in the market. Goodbye, everyone.